Good afternoon, traders. Let's go through the latest move in WTI crude, the US dollar, and gold. So starting with the WTI crude oil. Brent and WTI both came under pressure on Wednesday after 4 straight days of gains, with Brent closing down 2.3%. The pullback wasn't sparked by one single headline, but it highlights how recent price strength has become detached from the underlying bearish fundamentals. And Washington's new 25% secondary tariffs on India took effect, doubling the total tariff burden to 50%. Yet, these measures haven't stopped Indian refiners from resuming the Russian crude purchases, keeping the global supply intact. And meanwhile, US API data showed crude inventories fell just 1 million barrels last week, with gasoline and distillates also lower. The decline in distillates offer a touch of support, but overall stockpiles remain above seasonal norms, reinforcing a softer tone in the oil market. And next, US dollar. The dollar stayed volatile after President Trump announced the removal of Fed Governor Lisa Cook, which is an unprecedented step that raised alarm about the central bank's independence. The move is seen as part of Trump's push to accelerate rate cuts, and markets are betting heavily on a September reduction. Treasury yields reflected the shift. Shorter-term yields dropped, while the curve steepened as longer-term yields held firmer, which is a sign that inflation concerns are starting to creep in. The spread between 30-year and 2-year treasuries is now at its deepest since late 2021, and highlighting the tension between political pressure on the Fed and longer-term market skepticism. And last, gold. Gold regained upward momentum on Tuesday, reclaiming last week's high and breaking through a short-term consolidation. The prices are now pressing against the apex of a symmetric triangle, with the recent peak at 34.09 acting as a near-term barrier. A move above 34.39 would confirm a stronger breakout. And from a technical angle, gold rebound above its 20-day and 50-day moving average is encouraging. These levels, once resistance, are now turning into support. That suggests dips toward 33.24 or even last week's low at 33.11 may be defended, keeping the broader bullish structure intact. So to wrap up, oil is sliding back as tariffs fail to dent Russian flows. The dollar faces renewed political drama with Fed independence in the spotlight. And gold is finding its footing again, preparing for a possible breakout. So that's all for today's market review, and I will see you in the next one.